right, crypto exchange Gemini is partnering with Betterment, the largest independent digital investment advisor in the United States, to begin offering crypto investing portfolios to its over 730,000 customers across their retail and Betterment for Advisors offerings. Joining us now to discuss is Marshall Beard. He's a Chief Strategy Officer at crypto exchange Gemini. Marshall, thanks for joining the show. So I guess to kick things off, tell us about this offering and who can access it.
Sure, and thank you for having me. This is an incredible announcement. We've been working with the Betterment team for a long time now, and so today to announce this is a long time coming. So any Betterment user, right, in the U.S., Betterment users, they have hundreds of thousands of users and tens of billions of dollars under management. What this is going to do is offer the ability to access crypto. So one of the hurdles in the crypto ecosystem today is really around education, right? What do I buy? How much do I buy? When do I buy it? You know, Betterment offers a robo-advising solution, and so users can sign up for an account and get tailored, curated portfolios with access to crypto within them. So it's a really exciting offering. It allows a broader use across the U.S. for new individual investors.
And what cryptocurrencies will folks have access to it? And what's the appetite for this in this risk-off environment?
Yeah, I mean, look, the markets are a little cool right now. We know that it's one of these opportunities where you kind of put your head down and build. And that's what we've been doing here at Gemini, right? We're announcing these partnerships. We're still going to market. You know, we're building the rigor internally and we're building the partnerships externally to kind of go into that next wave. Historically, these are one of the best times to buy, right? When the markets are down, you know, you don't necessarily want to sell. You want to continue to build your portfolio. And so having kind of a robo-advised portfolio offering is a great thing during a bear market.
So you mentioned that this is targeted at new individual investors. And as you said, yes, like logically, this would be a good time to buy. But of course, people don't always operate like that. Are you seeing a lot of new individual investors at Gemini?
Yeah, I mean, look, volumes are low, but people are still in the ecosystem, right? And so, you know, our monthly transacting users are still pretty healthy on the exchange. People are still buying NFTs on Nifty Gateway. They're using the Gemini credit card, you know, for their daily purchases, right? They're still engaged in this ecosystem. The appetite for speculation might not be there right now, but the embeddedness that people have within the ecosystem already is still there.
Just to ask a sort of broader question, you know, regulation has become a really hot topic in the crypto industry. Obviously, exchanges are at the center of that. You know, we've had Gary Gensler basically reiterating his belief that he pretty much believes tokens are securities. I'm just curious, as a chief strategy officer, like your view is on the regulatory landscape in the United States. I know Gemini has always been very much like play by the rules, but I'm curious if you see a regulatory tightening coming that would affect the exchanges, or just anything that's, you know, particularly on the horizon.
Yeah, look, our business is built around the ethos of trust, security, and compliance. We believe in thoughtful regulation. We work with our primary regulators. We work with global regulators. We like thoughtful regulation. So, you know, that's really our stance. We have active dialogues with a lot of regulators for a lot of different things. Obviously, crypto is a new nascent industry with not much precedent. So we welcome regulation, thoughtful regulation. We work with regulators.
You know, Emily and I were talking up in the beginning of this show about, you know, how in Web 2 we saw a lot of folks, you know, praise democratizing and decentralizing information. And in Web 3, it's the same thing for finance, but we're seeing a lot of exchanges or, you know, big crypto conglomerates buying up other assets. Like, for instance, today we're learning that FTX is buying up Voyager assets. And I wonder what your thoughts are of this centralizing of crypto companies.
Yeah, look, M&A is part of all markets, right? If there's good opportunities, people are going to, you know, take advantage of them. There's been some distress scenarios that we've seen. I mean, Gemini ourselves, we've done a handful of acquisitions over the last few years ourselves. And so, you know, there's probably going to be some broader, larger consolidation. If there's distress scenarios that kind of require buyers to step in, we're going to see that, right? I don't think that's necessarily a bad thing. I think that's healthy for the market, especially like what happened here earlier this year. You know, there needed to be some support to kind of prop the industry a little bit during that kind of dislocation. So I don't really see anything wrong with that. What's interesting is maybe some more centralized players or maybe more traditional asset managers like a Betterment, for example, stepping into this space. And so what we've seen is the technology is hard, right? Building crypto native software is hard. And so we see a lot of banks, we see a lot of intermediaries, a lot of these fintechs or wealth managers kind of look for trusted counterparties to offer crypto services to their users. And so it's coming into the ecosystem through some of the large exchanges and current crypto native players, but it's also now being distributed out to more traditional players.
And just from an exchange perspective, what are you seeing in terms of institutional investment versus retail? We hear just a lot of different versions of the story, or like institutions buying the dip, institutions are sitting this out. What are you seeing at Gemini?
Sure. There's been this saying in crypto that the institutions are coming, right? We've heard that for a few years now. I mean, the institutions are here, right? Like they are engaging. There's still barriers to entry, whether that be security, compliance, regulatory related issues, right? Those are some of the main things. We do a lot of DDQs for a lot of large institutions on a yearly basis, and those usually are the main concern. So there's still some kind of onboarding barriers to entry, but there is appetite. People are getting involved. I mean, I think we saw large credit fund tokenizing one of their funds announced a couple weeks ago. We see large corporates putting assets on their balance sheet. We see obviously the hedge funds and the high frequency and the market makers that are still trading and being active in this space. The institutions are here. It is still just being developed, and we're kind of doing it together.